I do feel like, and Steve Leishman kind of echoed this yesterday, that we're so obsessed with the numbers next week and in November and where they may end, that are we missing a part of the Fed story we need to be paying attention to, Ethan?
Yeah, I think that they've basically told us what to pay attention to here. And it's really not the speed of hikes in the short run. That's kind of, they're catching up now. This isn't a hawkish Fed. They're just catching up. They started 6 months late, and now they got to go really fast. The real question is, how far do they go? When do they stop? And how long do they keep rates at very high levels? And that we'll only learn gradually over time. They themselves don't know where they're heading here. But I think a reasonable forecast has to have the funds rate going at least above 4% and conceivably as high as 5% in order to get that recession they need, unfortunately, to get inflation under control.
Do you think inflation, the way that we're seeing inflation, can be, to your point, put under control, given that so much apparently seems out of our control?
Well, inflation is being driven by four things, two of which can resolve themselves without the Fed. One is if we can get some stability in commodity markets. A lot of uncertainty there, depending on what Mr. Putin does and so on. But there are some signs of commodity stabilization. That helps. The second is re-engaging supply chains. We're seeing the improvement there. I think over the next 6 months, a lot of the supply chain spikiness in prices will dissipate. That leaves you with the two parts where the Fed has to do the dirty work. They've got to cool off the job market. It's way too hot. And they have to make sure that inflation expectations don't get out of control, that people don't start expecting inflation and embedding that in their wage and price decisions. So those are the two parts that are going to be much harder to get rid of. The first parts where you get flat commodity prices, better supply chains, we could get significant improvement in inflation in the next 6 months. But that's not where that's not where you win the war. You win the war in cooling off the job market and controlling expectations.
How long is that going to take?
Well, I think at minimum, they've got to keep hiking through the end of the year, probably into the first half of next year. Right now, there's a lot of momentum in inflation data. That's been really the message out of the CPI report. In the last 18 months, we've had 10 positive surprises for the CPI and only 2 negative. And if you add up all those surprises over the last 18 months, we've had 2.3% of inflation that wasn't forecast. That's telling you that people's inflation models are not inflationary enough. They've still got some of those old frameworks where inflation was dead. We're still under forecasting inflation. That's going to be really hard.
Ethan, when I hear the Fed talk about 2%, and I know we were at 2% forever, and then in 2021, all the stimulus money kicked in, the PPP stuff, we got port shutdowns, natural gas took off, inflation soared. To think about getting from where we are now to 2%, I mean, it seems like a fantasy. I mean, we're not even close.
No, I think, listen, it's been disappointing that we've had very tiny progress on inflation.
We keep spending money. Why would inflation go down?
Well, I think that right now we haven't cooled off the labor market yet. So we got to get the unemployment rate up. And again, I don't want that, but I think that's necessary to control inflation. We're only the beginning of the inflation battle. The big easy move, which will get us down from like 8 to 4, is flat commodity prices, and better supply chains. It's the last part, getting from 4 to 2, where the real hard battle is. I think that's the way to think about it. The supply side issues resolve themselves over time, and then we're left with the more fundamental demand and out of balance economy story. So it's not a fantasy to go from 8 down to 4.
Yep.
And then maybe 3, but then as you get closer to the 2% target, it may end up that it takes them quite a long time to make that final leg of lower inflation.